This stream is powered by Bybit. So I have been working along with Bybit for a long time now. I've been close with Ben Bybit, remain close with Bybit even when I was working with Phemex. I think it's the best exchange right now. I think it's the best sex right now. Best sex, as in centralized exchange. I think the market has been pretty scared of centralized exchanges. I think that'll change. On top of this, I have to add that, again, it is KYC. So if you are based out of the United States, then it is a no-go. But this is for people who are not based in the United States and are qualified geographically and from a resident standpoint. The link below will give you access to up to a $31,000 bonus. Phenomenal exchange. So the link is Trade Bybit. Again, trade where you want to trade. I worked with Phemex. I think Phemex is a phenomenal exchange. The Phemex link is still below. You can still get a bonus. Okay, Phemex is non-KYC. This next thing that I'm going to mention, then we're going to get right to it, is SyncQuote. So SyncQuote is a decentralized options exchange. I'm on the SyncQuote team. So I'm not just sharing a SyncQuote referral link. If you go on SyncQuote's Twitter page, they follow 11 people. I am on the team. So we are trying to create the best decentralized options exchange. All that out of the way. First thing we'll talk about, just to brush back up on it, is the FOMC. Yesterday was FOMC, a pause, right? But I don't think that Powell did a really good job of calming the market if you look at how the market has responded. So it appears that the market has taken the idea of any kind of cuts off the table going into Q1, Q2, I think even Q3 next year. But it is clear that more hikes are on the table. So even though we've paused the last two meetings, there are more hikes that are possibly on the table, higher for longer, yada, yada, yada. So today's jobs data was quite important. Now, the market is into a pretty significant level, kind of a level where you would expect people to possibly just get trapped jumping off ship. So from a technical standpoint, I'll take a look at that because it's not like, okay, things are looking really shitty, we're just going to short into the hole. But from a larger trend or intermediate trend point of view, I think that we have more downside in equities, or rather specifically equity indices. So I'll be trading the equity index futures. So yesterday we saw a really nasty response to FOMC. First move fake out, market snap back, all positioning really in that first couple minutes, and then just have been puking. And so today we had jobs data. Jobs data came in really strong. So, there's more argument for higher for longer. And I think that honestly, from a technical standpoint, I think we're looking at 4,200 in the S&P. What I will say is, okay, so yesterday I posted something. Let's just take a look at it. Go back down. I said, whoever said don't trade FOMC isn't a trader. You see a lot of people, a lot of like guru types on Twitter, saying things like, oh, no one should be trading the FOMC, stay out of the FOMC. Well, one, they don't really know who they're talking to, right? What you're going to do when you start trading is you're going to find the approach that works for you, right? Whether that is short-term trading, longer term sort of positional trading, swing trading, you're going to find what fits for you. So someone really, some large account might be saying that to everyone that follows them. And they might be talking to a quarter of the people that actually really just like dealing in the lower time frames. They don't like remaining overly exposed to the market. They want to get in and get out. They want to be more of a scalper and have that sort of steady equity curve associated. They don't want to have longer, positions in the market exposed. They're in and out, right? That the point is they are trading higher time preference. You get the point. That's based on, a lot of times you're going to fall into what fits your personality. So just one, don't say things like that, blanket statements. No one should be trading the FOMC. A lot of people trade the FOMC. It's not just scalpers. There's options flow traders. There are macro traders that are going to make big positional adjustments possibly based on things that are said in the conference. Like there's a ton of volatility. That's the point. FOMC is actually, for many people, a great event or a great release to trade. So the main area that I want to look towards is this meaty area that we were stuck under going on over a year. So most of that ceiling between 42 and 43, so 42, 42.50. I think the chances are that we begin to build another base before any kind of next major leg. And that this is the area where I want to get involved. This is for more of a swing and positional standpoint. So one, when it comes to like FOMC and any kind of economic data, I'm not trying to predict it. I'm not trying to make any bold assumptions or extrapolations based on it. I'm literally just looking at what the market is saying about it. I don't think you could do a better job than what the most liquid index in the world is doing, where most of the participants are trading and sort of placing their bets. So I think the best indicator is honestly, is the market. So is price. And if you've seen how we've traded the last 24 hours, I think it's a pretty good indication that things are going to be cooling off for a bit. So obviously we paused, but we should say that even though we paused, like rates are still doing the work. You know, where we sit right now, I wouldn't want to be overly positioned, overly indexed in crypto, because if we're looking at the S&P coming down 200 points, 150 points, I think that puts pressure on obviously all risk assets. We've had periods of decorrelation and where we've broken free from other markets, more specifically looking at stocks, tech. I think if we see the ES come down to 4,200, that's going to put a lot of pressure on BTC and ultimately ETH as well. So that's something to keep in mind. Now, where we are right now, though, this is the most important contextual level on the chart between us and that major point, right? So that 4250 level. This is not an area where I would want to be aggressively getting short or positioning myself in advance of that. I think that you want to look for some kind of bounce off this level. I think that you could expect more or less us to move sideways maybe into October before we get any kind of further breakdown. So high time frame wise, I guess what would we sum this up as? We're still at support, right? No real reason to get overly bearish, I don't think. I think that we're just kind of following previous cycles, honestly. More or less, I think this was the all-time high. There's a lot of people that talk about this being the all-time high. I think the all-time high is pretty objective. It's the all-time high. Like, I don't know why people, they insist that this was the all-time high and that this was just FTX. Like, it's an all-time high, right? This was far more of a blow-off than this was. There is a degree of symmetry between these cycles. So if equities are still showing signs of strength and we are going into 2024 and BTC is still moving sideways, then yeah, I think the bottom is in either way. But I think you could still expect a larger range to paint between, we'll say 31, 32. I would even go down to 21, 22 and say, hey, we could come back down there. And I wouldn't immediately just say it's lights out. We're coming back down to this low. So to 15 to 16. What I'm expecting is a lot of play between here. That yearly low, yeah, it stands out. No real probe below the yearly open, but I don't know. Just play it like it is. Play it as it lies right now. Maybe some other things worth pointing out. So we just look at the futures market. I've been talking about this for years, looking at linear futures contracts, the term structure, seeing whether or not we are in backwardation or contango. And you can still see the market is still trading from an annualized standpoint. Looking at quarterlies, it's still pretty high. I mean, it's not high, but the best dip buying opportunities are when this is relatively flat, when it's been in backwardation. So we don't have that. But looking at this and then looking at the options market, so futures market is still a little bit elevated from a funding standpoint. It's not the case that perps have been like overly negative. There's really no standout trap positioning there. Yeah, you probably have a good amount of sideline positioning, but it doesn't look like, people are really getting short. It doesn't look anything like that right now, in my opinion. If we look at 25 delta skew, so this is flipped. So if you look at something like Amber data, the formula is different. So when I say negative skew and I'm looking at Amber data, what I mean is that the puts are trading more expensively than the calls. What this chart is showing you, even though these skews are listed as negative, is that the calls are trading more expensive than the puts. So there's just still optimism, right? Especially in those further out contracts, there usually always is, but you could think about things on the horizon. It makes sense to be optimistic about the ETF, right? The halving. If calls are trading more expensively, we're saying that the market is optimistic. If puts are trading more expensively, we're saying that the market it's defensive. It's buying insurance. It's betting on downside. So something notable, at least worth pointing out, we had multiple days of overlap back here. So going back to the 14th, value, 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 value. So I call this sort of like the Russian doll setup, one doll inside of the other doll, inside of the other doll. It's not an inside day structure, but value is perfectly aligned. So in this case, you're going to want to make sure that you have some kind of composite for this. This is the value area composite. We reaccepted back within it. So you're trading back through a prior range. It looks like we have poor highs up here. So we have no real excess at this high. So poor high, decent, but didn't really do anything to clean these up. Like this took out this high, but again, left a poor high. So no major rejection, no major blow off. Instead, it's kind of just like a momentum roll. We didn't run into anything that really caused any kind of major snapback. So bigger picture, you get a little bit wider, zoomed out, you get a better idea of kind of where we sit. This is going back into August. So this is almost a month-long range. It's not, we had this major move up, but you could see where price spent most of the time. So most of the time in this region. So it makes sense that on the way back down, that area is going to be sticky. And then zooming out, I mean, honestly, this is the value area composite for this entire structure. So better yet, there you go. There's your value area for that entire structure. So you can see we're kind of flirting around the value area high. I mean, we're within it again. But I guess my point is, I think it's more like this pivot right here. Where we are is exactly where we need to hold, in the sense that if we lose 26, if we lose this region right here, I think you could just target this range low. This sticky point at the bottom is right around 25 to 25. Low time frame wise, so just more zoomed in intraday action. It's not like anything really stands out. We got the squeeze earlier that just led to a lot of crowding. So grinding up going into Monday over the weekend, you just saw CVD was pretty much down only. Prices still able to drift up and trapping shorts. We ended up getting a squeeze higher, but like default assumption when you have a lot of buying coming in and prices moving up and a ton of open interest behind it, default assumption is that those longs are going to get wiped. And you know, we're in a period of the market right now where there's no new money coming in. I hate to say PvP, but it is, right? There's only so much money in this market and positioning is getting hunted. So when you have we'll say a significant increase in positioning, so here's that spike up, big move up, very significant amount of open interest coming into the market. A lot of people thought that this was front running something. It's almost never the case, right? So what ends up happening is this kind of position gets into the market. We're into, you know, an area where it was pretty sticky prior, area we had just rejected off of, and that positioning gets unwound. And then the same thing happens after, right? Looks like a recovery and, oh, if this was a major rejection, should have led to continuation. This must be bullish then. And you just see the same. It's like people getting crowded at the lows, getting crowded towards the highs, and there's no real change in this market right now. How does this look on the monthly? I'd say not so good. Monthly, weekly, not so good right now. Below that low, retesting that monthly level, creeping back within a much larger range. I get hesitant about getting aggressive though, right? Possibly looking at least the midpoint of that range. But these kind of grindy moves down, I think that it's easy for us to spike and then have one big move that undoes all this. But I think just from a bigger picture view, this again, similar to BTC, I think we're going to retest probably 13, 14, if BTC retests 22, 24 in the next month or so, 2 months even. To get bullish on ETH, I would need to see us back above 17 convincingly. And then I could see something where you end up cleaning up the structure towards 18. But until then, I don't see a reason to be buying this ETH dip right here. You want to see something that offers a really significant response back. So something engulfing almost. ETH has a good amount of excess into this gap. So we tag those single prints right there. We're at the volume POC for that day. So we had a naked volume POC. So I ended up taking out all of these lows. This structure is kind of ugly right now. What you would want to see develop, honestly, is us develop more between 1564 and 1600. You have a ledge up there, so you have that anomaly. So if we could do that, move sideways, and then start trading back above there, to just combine these to give you an idea of the composite. It's loose up there, but it's a week-long range. I only want to take right now in crypto the high probability trades, or what I would consider high probability, and I would consider a situation where you have the market ranging like this, you know, puking nastily and then trading back within this. It just, a lot of times you're going to get that slingshot back up through the highs. In the case when you have no kind of clear rejection at the highs so far, you just have a rollover. So we don't have any excess at the highs for ETH either. So no excess, no major kickback. You have a decent, it's not a poor high, but there is an anomaly up there. There is like a little bit of a ledge. 3 days prior, we've just kind of rolled lower. So lower high, lower high, lower high. So in the event that if we're trading back above 1620, today's POC, we've had a swipe lower. Again, if the ES and the NQ are looking at some kind of bounce here, ES at 44 last time I checked, I don't know where it is right now, and we're back within this composite, I think you get overthrow to the upside. I honestly, though, when I think about it now, I think it's less likely with ETH because ETH has just been showing weakness compared to BTC. So for ETH, I would probably say above 1620 rebid, I would look just probably to this comp value area high around 1643. We're back within value prior day before breakdown, so 1620 to 1636. I think you probably get some kind of attempt back towards yesterday's high. But in keeping with the last few days and the last couple months for ETH, just relative weakness, I wouldn't expect a surprise the same way, you know, for BTC. Whoa. Getting a little funny with the words. A surprise the same way with BTC, where we were saying, okay, we have no excess at the highs. We're going to look at some kind of further throw towards 27.5 instead of just targeting point A to point B, the value area low to value area high of that composite. Link is interesting because if you were to just look at Link in isolation, this would look like the cleanest, sort of most textbook accumulation bottom, right? I mean, it looks like that until you realize like everything else did really well in that period. So you have $5 to $9.50 as sort of the ceiling. This is going back to May 2022. That looks great until you realize that like ETH and BTC and everything performed really well in that time period. Like this has not broken out. I don't know. I mean, it's tough to say. All I do know from this is if we are above 850, then it's like one of the cleanest setups I think you could take. We ended up having multiple months stuck within this range between 850 and $5, had the probe of the low. If we're doing something like this now, we're above 850, then yeah, I think you could target much higher prices for Link. Could Rune be a valid short on a bearish retest into 4-hour FG? Yeah, I mean, it's possible you have some kind of backside retest taking place right here. It all depends on where the rest of the market is headed right now, though, because this very well could be your breakout before putting in another attempt towards that $2 high. And I think $2 is honestly a good level to sell, though. Although, if we have a situation where we're above all this, market spikes up, let's say puts in some kind of excess towards 220, and then now we're trading back within this range and we're having trouble, then I think you look at trading back down into this range and targeting much lower. Again, it's just the idea that this is such an important contextual level for Rune. I mean, it's not that important, right? I mean, it's just an alt, but it's a nice area to find your risk, right? Major contextual level, 2023 highs, right? If we flush that level, which we already did, but if we're back up there now, if we flush it again and we're trading back underneath and we're having trouble at this point now, then I think you want to look at least 145. And if you've been overly excited about the market, just remember where we are. If you look at everything besides BTC and ETH, and you could do this minus stable coins, it's the same story. We're not doing anything. We need a catalyst. We need something to inspire retail confidence again. It's going to take some time. So maybe an ETF. Otherwise, you're looking at the halving narrative, and things could change. At least it's a time when we know we need to be paying attention. All right, guys, that'll be it, though. Thank you guys for tuning in. Please hit the like button if you didn't already, subscribe, all that good stuff. Until next time, enjoy the rest of your evening. Out.